What's up, y'all? How we doing? We're getting ready to start trading here in a few hours, and I'm just super excited. Sunday nights are kind of chill. You don't know what to expect. It's fun, right? And so I wanted to get on here and just kind of show you, okay, you're starting fresh. There's a chart. You opened up your charting software, and you're gonna like, okay, let's figure out what we're looking at here, right? So what I want to show you is just okay, I'm going to open a raw chart with no crap on it. No stuff. You can see my screen right now, guys. I'm using QUANTOWER with daytraders.com prop firm. I'm in the challenge. Just started it. I'll show you another on another video. We'll do a little breakdown of daytraders.com a little bit. I'm super excited, guys, but I wanted to show you, okay, what do? You open up a raw chart, there's nothing on it. Don't put anything on it. You don't need bells, you don't need whistles, you don't need doodads and whatever else you want to throw at your chart. The more crap you put on it, the less you're going to see what you need to see. What do you need to see? The vertical price levels. That's all I care about. The vertical axis, you know. And let's stop and think about the vertical axis, right? Up and down. That's all it is, right? But how does it go up and down? How does it go up, down, and then up more, right? There's so many dynamics to it. What you got to realize is that it's a river of money that never stops flowing. It is a language that you have to interpret. Um, So all I care about is things like support and resistance, um, previous support becoming resistance, previous resistance becoming support. And there's a lot of distractions. Anywhere there's trillions of dollars, there's going to be distractions, right, guys? I mean, that's all there is to it. There's money to be made. So let's give people a lot of avenues to lose their money, right? Oh, let's try this stochastic with the RSI indicator, and then we'll have 18 variables to look at while you're looking at a price just bounce, off of a support level. Well, yeah, all of your lagging indicators are going to show, oh, it bounced there. I should have bought, right? It's such a distraction. Do not get fooled by all that crap. This is a pure thing right now, right? And I'm a musician. I like to think of this as like, you know, if you have I'm a guitar player. So if you're playing an electric guitar, you got to plug into an amp. You got to have chords and pedals and interfaces and microphones and all this crap. Or you could pick up an acoustic guitar and just start playing. And that's what I try to do is play an acoustic guitar, play some chords, man, you know, keep it freaking simple. If I have one chart and I focus all of my time on that one chart, you become very familiar with the nuances and the intricacies of the price action itself. And once you can kind of predict where it's going, it feels really good. Your confidence builds a lot um, in your trading because you're like, oh, I've seen this. It's gonna do this, and then you're gonna do this, and blah blah blah, right? It gets predictable and boring later on when you get really good at it. And it's spectacular to see. So, but what I want to show you right now is I'll just open a raw chart and we're gonna look. What are we looking at here? And what am I looking for? So right now I'm on the 1 hour chart. So you got what, 8 hour trading day. So 8 bars is one day. So you're looking at, a week or whatever here. Um, and so what I want to do is just start mapping out the vertical levels. Oh, this is what I want to tell you. When you do vertical levels, horizontal lines are the game. I'm not drawing a lot of these trend lines with trend line breaks and stuff because I can see the pattern in my head and I don't need to draw it out. It's like training wheels for me, right? At a certain point, you just see, oh, that's a bearish flag. That's a bear flag with a ascending channel and it's going to retrace at the 61.8, right? Whatever. Um, but what I do is I focus on the vertical levels, so it gives you horizontal lines. These are the yard lines of your football field. This is your playing field. And every day we come out here and we determine our playing field. We determine how big our playing field is. Um, but you're trying to get the ball down the field, right? So that's vertical level. So what I'm trying to tell you is when you use diagonal lines on the chart, you are placing time as a factor into the chart. You guys hear what I'm saying? If I draw a trend line, blah, right? Okay. Well, this thing could just go sideways and break the trend line, right? But it's not showing me any force if it goes sideways through this trend line. But when you draw a line like this, you're saying, oh, it has to do this by this certain time. But so it becomes irrelevant over and over again, which gives you um, competing signals. It makes it more confusing and less clear, right? But when you use horizontal lines, they're just always in play and they tend to react more solidly with more confirmation and um, which gives you more confidence when they're reacted to on the chart. So what I'm trying to do when I just open a raw chart, I'm not putting bells and whistles on it. I'm going to come in here and not put all these trend lines on here, right? I want to trash this. I want to look at vertical levels. This is what I want. So I'm over here with the horizontal tool. Boom. And what I do here, I'll put this thing where the candle's closed, right? I don't want to be here like putting it at the end of the wick, right? I'm looking at when the actual candle closed. It's very important to me because it's very important to algorithmic traders that cut out the noise up there and are looking at the factual data. And the factual data is this candle closed at the end of this hour at this price, right? Which took a lot of work to get there. So you'll see, like in the future here, you'll see another reaction. It'll be on this line where this line is now, not up here. Okay, so you got a top. You found a top. Okay, congratulations. You found now let's find a bottom. Here's a bottom. So this happened. Why did this happen though, right? You guys want to know why this happened right here at this price level? It's it's rocketing downward and then all of a sudden it stops. Well, as a rookie, you don't know why, so you just kind of keep your stops too tight and you don't know when to jump out. You're not paying attention to where the target is. Now, if we scroll back, boom, look, guys, always look left. This predicted the future. So I'd put this line right there at the bottom of this candle. Let me scroll back. Right here, right? So this is the past, and we're playing around up here in this market, and then all of a sudden it comes down real hard, right? Well, how far is it going to go down? It's going to go to where the buyers were the previous time back here, right? So the past is a clue to the present. And if you can, the faster you can decipher this, the faster you can put in that buy order confidently and know I don't need that much risk here because I'm at the right point in the chart. something that helped me a lot when I became a better trader is that, the price is 99% of the time, the price is not at a good price. And you need to plan. This is why you need to plan ahead and put your orders ahead instead of being reactive to the market. When you're a rookie or a newbie, you don't know where the market is going. You don't know what targets are. You don't know, oh, this is this formation yet, and your brain hasn't been trained to see the patterns that happen over and over and over again. I've been trading since 2003, guys. The charts look the same as the way they did back then. Can you imagine that? 2003. It's before Facebook, guys. That's how old I am. But, so what I want to do, I mean, if you're going to do one trade in the day, man, just put a buy order down there where they bought a lot before. You don't have to overthink this, all right? But you do have to be patient and wait for it because I am a gunslinger. I had to learn, I'm always a shoot from the hip kind of guy. Oh, I'll just jump in. I see the price moving. Let's just jump in and scalp it. Which is probably why I was in the Forex market for way too long, not making not enough money. Um, So what you want to do is just find these key levels within the day before the chart starts moving. Okay. So let's do a horizontal level right here where, you see kind of this range here where a big reaction happened. And then here's another spike down here, right? So as this thing's coming up, how far will it go? I don't know. It'll probably stall out right around here, coach, right? um you know and so like a trend line like this is the rookie stuff where they always tell you, oh, do this trend line right here, right? And then okay, that's great, but what's going to happen, it could trash around here for 5 days and then kind of do nothing while this thing is just kind of putting a time constraint on it, right? It could just kind of curl around here for the next day or two and not do much. But I like to get into the 1 minute and the 5 minute and really get some scalps out of it before, while I'm waiting for this big move to happen. But what I'm trying to do now is figure out where is it going to stall out in price. If this thing keeps going up, where's it going to have some trouble? And where's it going to reiterate what it wants to do? Right? I would say that if this thing pops through here and then has no trouble at all popping through again north of this yellow line here, then it could easily break this trend line here, which isn't enough confirmation for me. I'd like to get like a scalp up to here, see what it does. If it starts breaking up here again, I'll wait for it to retrace, see what it does, and then if it's gonna start being bullish, here's another good place to maybe buy, right? Is once it passes here, right? So you got a trade to here. You have a trade when it retraces back to this line because previous support will become support again. But it would have to fight through it a little bit, right? It's gonna go here, retrace. So here's another trade over here somewhere, and then here's a third trade when you start popping these lows. Like here's an important one that I would look at because here's a swing low where it happened before, just on the way up again. And so you can see here's support, and then it became resistance on the way down, right? So this is how you're making a ladder on the way up, and then you see the rungs on the way down and those are targets, right? So like let's say it does get north of here, right? It comes up here and gets north of here. I want to see it curl down again, maybe wick a few times, come up, come down again and wick, and then really strongly come up. That's when you know it's going to make this huge move, and this is the target, y'all. This previous high, once we came off of that, we're gonna go mess around down here, and then we're gonna look back at the latest swing high, and that's our new target now, guys. And that may take a week to get there, or it may take 3 days. Who knows? Depending on how strongly it gets through these other barriers here. But what you're gonna do is you're gonna look at the previous times where the chart did make a new low or a new high, right? So all these are on the way up over here on the right side of the chart are the new targets, right? So now we have all these swings, and I have mine chart to snap. So it'll snap kind of there and it's kind of off, right? But if you see in the future, oh, that's kind of a round number, 24,730. And then you see how it reacted. It reacted, it busted through here. They came and sold some more here and eventually got a lot more here and sold off. Now they came back and got some more, but as it comes down, all these lines become targets. And what you quickly see is that, oh, the playing field is divided equally. It's like 10 yards, 10 yards, 10 yards, touchdown, right? You can see it now. When you start to put all these horizontal lines on the chart, you're like, oh, it's just a bunch of boxes. It's like looking at a map and everything is like a grid, it's everything is parallel to everything else, And so I'll take this trend line off, and so you can just see the pure once you know these horizontal levels, guys, it cuts out all the noise because you're really just focusing on how it reacts to each level. And then you can start to zoom in and go, oh, okay, well, I see why this one had support here, or whatever, or why did this have trouble here and pull back because it had trouble before, or whatever. Um, but previous support becomes resistance in the future. Previous support becomes resistance in the future. Previous resistance becomes support. Um, it's like you got to get 10 yards at a time to get your first down. So you have to go down there and see if you can get the first down. Well, it's a sports analogy that works well for me. But this is kind of what I do, guys. I just see how things react. Like here, uh, this level was already determined here, right? So, like, let's say we're trading, we're seeing all this, and we see it come down. Well, if it smashes down on this line again, it's probably going lower. It couldn't go higher. See, it got sold off here and sold off here. It couldn't reach this previous swing high at all, right? It ran out of buyers here. So the sellers came in and took over. Well, where did they really sell? Right here. This part right here. This guy. I see this is a really good place to sell. And then you kind of it's kind of a given that you're going to come down here and test this swing low, right? On this candle before. So you see how the past, they're carving out what they're going to do in the future. So when this came down, it couldn't go any higher here. Boom, swing down. There's your target. So you can easily get a scalp here or in this range, right? With this as your stop loss, and then you're getting a box, you're getting a whole grid. So you're risking a half of a grid to make a full grid. Well, what happens? You made a full grid, it retraced. What did it do? It came right back to where you sold off the beginning before. So you put another sell order. You don't try to sell and then buy and then sell some more, right? You don't want to do all that. You're playing to the downside, so you're getting this trade. Boom. You're getting this trade here down here from this area to try to get that target, right? Now, once it hits this target, it has to go retest where it busted out before just to see, are you sure? Or is this a fake out and we're going higher, right? If this goes up and smashes right here, and then you got this huge red candle, it's obviously going lower. So now you're in this 10-yard area, right? Now you're downfield, right? And so I think of this as just like the touchdown. They're just driving to the end zone, boom, and once you get it, the ball goes the other way. I love football. I watch me some college football all the time, so maybe I, just relate it to that. But that's what I see. You got to get 10 yards. You're not trying to get a 100-yard pass down the field, right? You're trying to get 10 yards, 10 yard, and then sometimes it busts out and do a 30-yard play, or whatever. So that's just it. This is what I do, guys. I'm scalping within the framework of the structure, but then when it busts out, I let it ride and add more. This is how you make it asymmetrical towards with your risk and reward.